Welcome back to the Dividend Diplomats YouTube channel, everybody. We are pumped to bring you this video about a Dividend Aristocrat that's about to release earnings, and we are going to discuss the earnings preview with you today.
Smash that subscribe button, give Bert and I a thumbs up, turn that mother sucker blue, because we're about to turn you blue after you see the symbol of the Dividend Aristocrat that we're about to talk about. Hopefully we're going to be rethinking impossible.
Oh, and their logo's blue, so this all ties in perfectly together.
Smash it, baby. Give that thumbs up.
We are in the heart of earnings season right now. Every company is releasing earnings, it seems, based on how they performed in the quarter. And this has been quite the quarter so far, because this is the second full quarter where results of the companies and their performances based on the pandemic and seeing how they've unfolded and trying to give us a peek into the economy and the overall state of it.
This will be the second Dividend Aristocrat company we're going to talk to you about what to expect with earnings. And again, this is a huge company, iconic company, one that's been around for tens and tens of years. I mean, just 50 plus years this company has been around through acquisitions and just becoming a global telecommunications giant. There's a little hint for you there.
Yeah, my grandma even worked for them back in the day too. So yeah, they have been around for a long time. And this is a company that Laney and I both own probably a pretty significant portion of. I know I've been much more aggressive with adding them over the last 3 or 4 months. Laney's it's just kind of stagnated and fallen to levels I haven't seen in a while. So we are pumped and we are going to be watching very closely too, since we own a lot of shares. We want to see how this company is doing and what their performance is going to be.
Therefore, we want to talk to you about this dividend stock's upcoming earnings release, what it can mean to you as a shareholder, how they're currently trading today, and what investment move you may be able to make after their earnings release.
All right, everyone. So what's the company? We've teased it. I'm sure you've guessed it. You guys are smart. You've watched our channel by now. You know how we operate. You know what the company is. So let's just have it. This top 5 foundation stock that we are going to preview the earnings for today is At&T, ticker symbol T.
So why are we talking about At&T? Well, they're a top 5 foundation dividend stock. And as dividend investors, we're using the power of dividend income to fuel our journey to financial freedom. And why do we want to talk about it specifically on our video is because we want to teach you about financial education and help you make financial decisions on your financial investment journey.
Yeah, and why are we covering At&T in particular? This is one of the hot button companies in the dividend investing community. Their dividend yield has soared to levels I haven't seen in a long time. We did a video a few months ago where we were talking about their dividend yield of 7%, and it continues to climb as their stock price falls. So it seems like a great company to just keep highlighting and keep discussing and bringing more information out into the community so you can make that investment decision.
Yeah, leading into this earnings here on October 22nd, they're actually yielding even closer to 8% at this point. So, a Dividend Aristocrat company yielding this much is sure to garner attention in the investing community. Now, with many products that At&T has under their umbrella, they have telecommunications, right? With their 5G upcoming network to compete with Verizon Wireless. They have their television of At&T TV. They have HBO Max.
Yeah, so they're not just a cell phone company. They are very well diversified, and I think the HBO Max is a huge addition to their product portfolio, considering where media is going in 2020. Heck, Disney just announced that they're going all in on streaming and making that the forefront of their earnings release. So companies that have content,
content is king, baby.
Yeah, and strong content. Everybody knows HBO. Everyone knows the content. They produce some very high quality shows too. And Elaine's a huge Entourage fan.
Yeah. Now, they also, though, obviously went through a major acquisition over the last few years with Time Warner. So that brought in even more content, more entertainment ability to bring it to you in your screen at home.
I think the acquisition is a great segue into the other main reason why At&T is in the news. Moving away from what they acquired, it's how they acquired the company and the debt that the company took on in their balance sheet. Between the Time Warner acquisition and the DirecTV acquisition in the past, At&T's balance sheet has ballooned, and they have taken on a lot of debt. And I know that's usually the first thing that comes out of our commenters' mouths, or what they're typing in our comment section is, AT&T is great, but what do you think about their debt? And it's a fair question, and after reviewing the news, reading some materials from AT&T, the company has been aggressively trying to pay down their debt. They've been looking to sell off pieces. They've been finding ways to keep and bring that debt burden down and make it manageable. In fact, the CEO talked a few weeks ago how he's going to continue focusing on paying down the debt, how the company will keep aggressively paying it while also maintaining the safety of their dividend, because sure, paying down debt's important, but also having that dividend is just as important for AT&T, which was music to my ears.
So let's get into where AT&T currently stands from a stock price standpoint. They're trading at just over $27 per share.
That's insanity.
With a forward dividend of $2.08 per share, and analysts are projecting, just a hair over $3 in earnings per share. So using the Dividend Diplomat stock screener, in short and in summary, we'll give it to you in a high level here, is that price to earnings ratio is below 9. That dividend growth, or that dividend payout ratio is actually just over 60% in the mid 60s. And that dividend growth rate, again, they're a Dividend Aristocrat, and they've grown dividends for over 30 plus consecutive years, year after year after year after year. And that average dividend growth rate has been typically around that 2%, or they increase it around 1 penny per share per quarter.
That's been pretty consistent with AT&T, that 1 cent.
It has. And then the currently yield, obviously, we'll say 7.6%, based on the stock price of just over $27.30 with a forward dividend of $2.08. So you're getting a substantial yield right now in comparison to your savings account and from the S&P 500 as a whole. So that's where they currently stand.
Yeah, and that's why we both have added some to AT&T, especially even over the last week. I purchased a bunch of shares for my portfolio. My wife, Lainey, added 1 share, seeing the price below 28. So the metrics are looking great, and we're just excited to continue building and adding to this company.
But the question right now is, from beginning of this video, is what do we think is going to happen with AT&T's earnings release? Bert, what's your current take with AT&T and their expectation on their earnings?
Oh, I think this is all going to come down to, there's going to be one major thing that's going to drive their earnings release, in my opinion. It's going to be whatever they announce with what's going on with DirecTV. So the company has been rumored to be selling off DirecTV and getting ready to open it up to auction. AT&T, I believe, purchased it for almost $50 billion back in the day. The offers they're receiving are nowhere close to that. So are they going to hold on to DirecTV and wait to improve, or are they just going to sell that division at a lower price? That's going to drive, in my mind, the stock price after this earnings is released. We'll know more because of accounting purposes, but I won't go down that road.
So the actual impact, though, on earnings right now on the quarter, I'm expecting that revenue and earnings are probably going to be slightly down. That's my take. My take is that because of the global pandemic, many things haven't happened. You can think of, they've had a cinema or movie theater segment because of that Time Warner, purchase. They haven't been able to produce as much content. They have a lot of old content, but producing new content is insanely difficult right now with social distancing and businesses being shut down and just having difficulties in overall production.
Yeah, so I agree with that assessment, Lanny. It'll be interesting to see what happens and how their subscriber base is going to change, especially as they have in competition with Netflix, with Amazon Prime, with Disney now. We'll see what consumer behavior is, and we'll get a good look into that picture here when they release earnings.
It'll be bolstered up, though, by the subscription growth on their streaming services. So my estimate is that they're going to highlight the growth in streaming and their 5G capabilities. And they're probably going to hopefully highlight that as so much that it may cover some of the declines that they're going to show in their earnings.
Because again, that's what we like about AT&T. They have many different levers they can pull. They're not just dependent on content. They're not just dependent on wireless. They're not just dependent on internet. They have all 3 of these major services they provide consumers.
So what direction do we think the stock price is going to go, starting at their earnings release? Bert, what's your take from the stock price standpoint?
I think, if anything, I would say the stock price is going up. based on this, and just the only reason why I feel that way is because I think a lot of the bad news is already built into the stock price. We've seen their price decreasing just slowly, steadily go down, especially as news about DirecTV and their sale for a lower price has been released. The stock price just keeps slowly ticking down. I don't know, I can't forecast, I can't shake the snow globe and tell you where it's going, but my gut says a lot of the bad news is kind of built into the stock price. So if there are some positive news like Landy was suggesting, I would see the stock price going up. However, it could go in the other way too if a lot of the news is negative. What are you thinking, Landy?
Yeah, I'm thinking you're going to see an earnings on this quarter between 75 cents and 80 cents per share. I mean, if you kind of annualize that out, I think the stock price honestly has not really changed in, more than 50 cents in either direction. I think it's going to be kind of right where it is, to kind of go hand in hand with what Bert said. It's kind of baked in, but I don't think we're going to see and know enough to know about what could change going forward. I know the talk about 5G is so prevalent right now, but nobody here from my neck of the woods has been like, oh, I can't wait for 5G. 5G is gonna make me so much happier. So, it's kind of like when 4G got rolled out. It was great, but only like 2 cities actually used 4G probably for the first year.
Yeah.
So
it's that one technology that it takes a while to roll out. I think that's an excellent point, Lanny.
So I guess we'll have to see. Obviously, we don't look at stock price from a standpoint of we want the price to go up. Oh, we live on appreciation, but we're really more concerned with earnings, and earnings drives stock price in a efficient market.
Mm-hmm.
But
and to that point with earnings, you can't have, we always look at a payout ratio. Earnings is the denominator in the payout ratio. So we always have to keep an eye on your earnings, because then that will tell you if something's going drastically wrong with earnings. It could impact the safety of a dividend, and we are the dividend diplomat, and that's ultimately what we care most about.
Yeah, we want to make sure the dividend's protected, which it will be.
Mm-hmm.
It will be. I mean, I think the dividend is still safe, because when they pay 52 cents per share right now in a dividend, I think they're earning between 75 to 80 cents. You do the math, okay, the dividend is less than the earnings, so the dividend is protected. In fact, I hope they keep the dividend growth low, because I want them to use any extra cash as they can, obviously to reinvest in the business, but to also pay down that debt from those acquisitions.
Yeah, I agree. So everyone, let us know what you think about AT&T's earnings. Where do you think the company's going? What are you expecting here? Do you feel like some of the negative news is already baked into the company, like we're suggesting here? Or are you expecting a pop in the stock price, or to continue going down further? Please put it in the comment section. Let us know.
And let's just hope that AT&T sticks to their model of rethinking impossible and doesn't go into the let's rethink our dividend.
This is Lanny and Bert from the Dividend Diplomat. Over and out.